I am Gopi Krishna from Glorious IAS Academy. Today we will discuss about RBI guidelines and gold loans. Yesterday in Hindu newspaper there was an article, RBI issued new guidelines on gold loans. We will see what are those guidelines and what are the objectives of RBI while issuing these guidelines. And in the process we will also see some overview on gold. And tomorrow is also Akshaya Tritiya. For Jains and Hindus, this is a auspicious festival. Hindus buy gold, assuming they'll bring more prosperity. So let's discuss something about gold today. So the idea is UPSC, we are not expecting a direct question on RBI guidelines and gold loans, but we have to use this knowledge dynamically. Suppose we are discussing about RBI functions. There we can creatively use this. RBI regulates, gold loans also, and newly issued guidelines are one of the evidence for that. And also, while we are talking about non-banking finance companies, NBFCs, there also we can use this. All the knowledge we have to keep it dynamically so that wherever required we should be able to use it, rather than expecting a straight question from RBI guidelines and gold loans. Let's go into it. So first and foremost is we will see what are the powers through which RBI issued these guidelines. This is one aspect all the aspirants should look for whenever anybody takes any action. Based on, they will get the powers based on legislative powers, because there was an act of parliament or state government act, or they get powers through executive direction, through executive orders, or they derive power directly from the constitution, the ultimate source of the power in Indian Republic. So you have to see through which they got the power. This is a interesting way to improve your knowledge also. And when you become officers also, you act as per the act, and legislation gives you the powers, then only we can act on it. Otherwise we can't. So the powers are Banking Regulation Act 1949. It empowers RBI to give direction to the banks in the public interest and in the interest of public policy, and other reasons are also there. We will stop there. So in public interest and the interest of public policy, RBI can issue guidelines to banks. It can give direction to banks and they have to comply. RBI is bankers' bank. They cannot say we won't comply. And another act is Reserve Bank of India Act 1934, and through section 45JA, RBI issues directions to NBFCs, non-banking finance companies. And NBFCs are big players in issuance of gold loan. You must be hearing these names: Muthut Finance, Manappuram Finance Limited. So they are big players. We will know something about NBFCs. Many students hear about them. There may be some confusion. So if there is a confusion, we will try to remove it. NBFCs, non-banking finance companies, as the name suggests, they are not banking companies, but they are finance companies. They are giving some finance service to the consumers. What are the, based on the finance services, we can differentiate them into different categories. There are many categories, but I have given 5 examples so that you can get a broad understanding of NBFCs. So one is loan companies like gold loans, as we have seen Muthut Finance Limited, and you can have Bajaj Finance Limited also. So they give loans. Second type of NBFCs are investment companies. So they take money from the consumers and they invest in the stock market, mutual funds, and other places wherever investments are possible. So for example, HDFC Securities Limited. This is also a type of NBFC. There are many. And another type of NBFCs we don't hear much are infrastructure finance companies. They are specialized in investing in the infrastructure finances only. That is, for example, Power Finance Corporation Limited. There are many. And microfinance companies, you must have heard about them, like Ujjivan Small Finance Bank. They target rural and small, people. Microfinance, they are targeting small amounts of lending. And fifth one is housing finance companies. They finance housing projects. LIC Housing Finance Limited. So they are like they develop expertise in that sector and they become a finance company. So that is NBFCs. NBFCs are not banks, but they give some financial service to the consumers. These are the different types and there are many more, but we are not doing PhD. This is sufficient, I think, for the understanding. What is the difference between banks and NBFCs so that we can get more clarity on the concept? So banks can accept demand deposits. As most of the students know, banks take two types of deposits, demand deposits and time deposits. Time deposits and demand deposits. So what are the time deposits? Time deposits means after a fixed amount of time you can retrieve the amount money, like it's a fixed deposit. Fixed deposit is a time deposit. Like there will be a lock-in period, you put the amount of money, it will be locked in for 3 years, you get high interest rate, but you cannot withdraw in between. If you withdraw, there will be a penalty. So basically it's like a time deposit. Like after a certain point of time only you can withdraw the money. So during that time lock-in period, bank can use the money and basically they invest, they earn the profit, and that's how we pay. They pay a high interest rate. But what are the demand deposits? Demand deposits are the normal deposits which you put in saving accounts or current accounts. So anytime you can take the money out. So banks can accept that, but NBFCs cannot accept demand deposits. They cannot take the money from the consumers and store it and give it back. So this is the main difference. Another difference is issue of checks. It flows from that only because there is demand deposits, based on that checks are issued, but these NBFCs cannot issue checks. And the deposits held in the bank are now insured up to 5 lakhs, but the deposits are not insured in NBFCs. So there is a certain amount of safety for the banking deposits. Up to 5 lakhs they are insured. So even the bank fails, that amount of money consumer will get. And they are stringently regulated by the RBI because so many people invest their money or save their money in the banks. So there is a stringent regulation by the RBI. This is less stringent compared to the banks, but regulation is still there on NBFCs also. And banks offer wide range of services, as you all know, like checks, demand drafts, and payment from one account to another account, and you pay to the merchants. All kind of services are available, but here only lending and investment services are available. Specific NBFCs. So banks is like they deal with the money in multifarious ways, in different ways, but NBFCs are specific. Certain kind of like investment and loan mainly, and different kinds of investments are there, so different NBFCs. So I hope this concept is clear. If not, you can drop a comment, we will give more details. And so now we will go into RBI guidelines to the gold loans. Today's topic, what are the new guidelines issued on yesterday on 28th April by RBI. We will go into that. Before going to that, let us see what are the objectives, why RBI is issuing these guidelines, so that we can have the conceptual clarity in the mind, why it is doing it, so that we can see what very easily and try to remember them. Always RBI enhances transparency and protects the interest of borrowers. Customer protection. These are the two main goals of the RBI. So transparency has to be increased and customer protection has to be there. We will see how through new guidelines this is being done. And secondly, improving the risk management to lenders, so that if the asset goes bad, all the whatever loans are being given, they are called assets, because bank will get the money back. So from the bank point of view, it is an asset. So RBI ensures that the asset quality doesn't go down, means the loan doesn't become NPA. Means the loan should be repayable. Otherwise, if the RBI control is not there, lenders may take extreme risk. Extreme risk may bring lot of profit. At the same time, they may lose lot of money. So it will ensure that lenders do not take extraordinary risks and they play within the boundaries. Then preventing evergreening and maintaining asset quality. Evergreening of loans means, suppose a person took the loan for 12 months and he is paying the interest regularly. However, he is not paying the principal amount, and after 12 months he is extending the loan again. So for another 12 months, and here also he is paying the interest, but he is not paying the principal amount. This is called evergreening of the loans. There is a problem with this because we don't know whether the asset quality became bad or whether it became NPA, so non-performing asset, meaning to say. So this RBI doesn't want. So it wants to prevent this evergreening, basically to maintain asset quality. Loan quality should be high, and ensuring appropriate end use of the funds. Whenever people pledge gold and take the loan, RBI new guidelines wants to ensure that whatever the purpose they want to take, they have to follow that only, so that they don't misuse the fund, they can repay the amount, they do not waste the amount. So this is for consumer protection and also protecting the lender and promoting the responsible lending and borrowing. Ultimately, there should be responsible lending and borrowing. So let's go into what are the RBI new guidelines. One is stricter underwriting. Basically, previously, borrower can come and pledge the gold ornaments or gold, and he will get the loan. But now, what RBI is saying, lenders required to assess borrower's repaying capability. They will see whether borrower can repay the like income proof will be seen, whether borrower can repay it or not. So this will improve the asset quality, and also it protects the consumer so that they don't take the money which they cannot repay. And restriction on loan renewal and top up. As we have discussed, loan renewal means evergreening of the loans. So there is a restriction on that. So if you have taken the loan, you have to repay it. You cannot extend it by paying the interest again and again. Transparency in gold evaluation. So when the gold is measured or quality of gold is checked, the borrower also should be there. There should be a trust element between the lender and the borrower. So this promotes transparency. There are no doubts, and the transaction is done clean manner. End use monitoring. So if a person is pledging the gold for education use, he should not use it for marriage purpose, and vice versa. So basically, end use monitoring also protects consumer and at the same time lender's interest also. And restriction on collateral. So restriction on collateral means what kind of gold you can put as a collateral. There are restrictions. Suppose we want to see the ownership of the gold also. Jewelry is okay, but when you are putting gold biscuits and all, there is some restriction on that. And limits on gold quantity. So amount of gold that can be pledged for borrowing also, there is a limit, so that unlimited gold should not be put. And limited tenure of personal loans. So it means like within 12 months they have to repay the amount, but they cannot extend it, they cannot evergreening it, so that asset quality becomes better. Loan limit for small banks, only 5 lakhs can be given by RRBs and cooperative banks, so that their risk element reduces, because bank gold rates also fluctuates, so it's a risk to the lender also. So maximum loan to value ratio 75%. Suppose the gold cost is 1 lakh, the lender has to ensure that the maximum loan amount will go after adding interest also up to 75,000 only. So if the gold rate varies, his interests are protected. Portfolio caps. Lenders may need to cap their gold on the total percentage of loan. There will be a fixed amount of portfolio for the gold, say whatever 25%, 15% among the total lending, total loan amount. They cannot increase that. And auction transparency. Whenever banks are auctioning the gold, because lenders borrowers couldn't repay, there should be transparency. The dates have to be, known to borrowers well in advance, so they know they should be given opportunity to repay. And borrowers are entitled for compensation for delay. Suppose borrower repays the loan and lender is not giving their jewelry back, then they are entitled for a compensation. It is like fining the lender, protecting the interest of borrower. So we have seen so these are the objectives. Now you have seen the guidelines, how these objectives are met using the new guidelines. So now as we are discussing gold, let's go and talk general issues on gold. India's, as you all know, India now is the largest consumer of gold. That is, we consumed around 563 tons of gold in 2024. 1 ton is 1000 kgs. So that is the world largest. We surpassed China also in the jewelry, and total is 800 tons. Like this includes investments and RBI purchases also. So this is the amount of gold India is consuming. So the appetite for gold jewelry is very high. There are many reasons for this. You must be aware of them. Cultural reasons, like people use gold in marriages. Gold is a status symbol, and also gold ornaments are made to God, and even in Tirumala Tirupati Devasthanam, people give anonymous donations of gold to God also, and there is a sociological reasons also, according to because in patriarchy, women are not being given property rights. They legally they are entitled. Because of the patriarchy, many are not being given, which is changing now. So there are only two properties, it is said, of the women. One is gold and another is son. So it is the irony of Indian patriarchy system that women crave for a male child. Perhaps the mother knows the difficulties of a girl child, so she also craves for a male child, and at the same time the status also comes with giving birth to a male child, which is changing tremendously with nuclear families and other sociological changes. But there is a long way to go, because as the students of UPSC, we all know the problems faced by women from birth till death. At every stage, the nutrition received for the girl child, and people are trying to kill the girl child in the womb only. So we all know all those issues. So they keep gold as a asset, so that for difficult times also they can pledge gold and take loans, and it is a status symbol and a kind of protection for the woman, and she usually transfer it to the girl child, that is her daughter, as an ancestral property. So these are the reasons why India consumes a lot of gold, and in Akshaya Tritiya another bumper sale and purchase of gold is going to happen tomorrow. And sovereign gold bonds. This is an old scheme, but as we are discussing about gold, let's review it. So sovereign gold bond, it's an alternative to physical gold. Basically, it's nothing but on paper. People invest the money. It's like instead of purchasing the gold, you get a bond, gold bond. It is for 8 years. So suppose you purchase the gold at say 70,000 per 10 grams, and after 8 years, if the gold rate is let's assume 80,000, so you will get 80,000 money. So, and also every year 2.5% interest also will be there. On the 2.5% interest, tax will be deducted, but on the capital gains you won't need to pay the tax. So tax benefit is also there, and there are many benefits, like the storage problem will go away, the making charges will go away, and there is no risk of theft, and so safety is also there. So this scheme is that way, but the limit is 4 kgs only. But however, because Indians have preference for physical gold jewelry and physical gold bars, this is it's performing well, but a lot more can be done in this sector. So around I think 3% of the total gold purchase comes under this scheme, but it's a RBI issues the sovereign gold bonds. That's the important point, and guidelines are also issued by the RBI on the behalf of Government of India. RBI issues sovereign gold bonds, and it's alternate to physical gold, and advantages are there, and the tenure of bond is 8 years. After 5 years you can start withdrawing also. Another change we can discuss about gold is change in the import duty structure in 2024 budget. You must have read about it, from 15% to 6%. So this made gold cheaper to import. The reason it is done is to raise the to reduce the smuggling. It led to raise of imports from Dubai. Recently also you must have heard the case of Karnataka actress who was smuggling gold from Dubai to India. The main reason is in Dubai tax is less, so the rate is less in Dubai. So people smuggle gold also, because if you remove the flight charges, even the legal amount of gold you can bring also, it will be profitable. So because of the change in the duty structure, there was a rise of imports from the Dubai. As you know, doubling was happening. Government of India is aware of it, and industry is also asking the government to take steps. We have to see. We may see some changes in the duty structure. As of now, there is no change, but the more imports from Dubai are happening because of the change in the import duty structure. And alchemy. You all know about alchemy. Alchemy is the process through which, in olden days, people were trying to convert base metal into gold, and it was it was happening in Egypt, Middle East, India, and China. People thought all the metals are considered to be made from the same material, and gold is the purest form, and so therefore they can convert all the base metals like iron into gold. So alchemy, and in India we call it rasayana. So alchemy was the quest to convert into gold was always there. It is considered to be a spiritual process also, to becoming the purest form, and there is so this was there, and it laid foundation for the early chemistry, because they were experimenting with the metals. But after the chemistry, the alchemist ideas were were negated, so it's not there. But I just wanted to mention that. So this is my presentation. Thank you very much. I am Gopi Krishna from Glorious IAS Academy, and try to use the knowledge. Don't see this topic as RBI guidelines and gold loans only. Use it dynamically. Means you will be reading about RBI functions. You can add this there. RBI regulates banks and NBFCs, and gold loans also protects the interests of borrowers also. You'll be learning about NBFCs. You can add it there also. So like that, use the information dynamically rather than seeing it statically. So that way your memory also improves, knowledge also improves. Thank you very much.